We've always been in a very competitive landscape in Southeast Asia. It's been always the same for many, many years. So how we've been playing our strategy is centered around product differentiation. It's been a very key pillar for us in the last few years. And in the last, if you look at 2024, we introduced a number of new set of products. And these products actually driving affordability, which has brought in more users into the platform. It's improved reliability also, which has continued to fuel also efficiencies on our platform. And that translates to also a much greater user experience, and also for our driver partners and our food merchant partners also to be able to earn more on the platform. If you look at it last year, actually our 2024, our drivers and our merchant partners' earnings were up on a year-over-year basis. So it's important that we continue to fuel that healthy marketplace because it sets us apart from all the other competitors that we have in this competitive landscape of Southeast Asia.
Peter, JP Ong here. I do want to talk about Grab's path to profitability, but first, since Mandy brought up competition, I do have to ask you about some of the news items we got over the last couple of weeks, especially with there being talk or speculation that Grab might have actually been in advanced talks for a possible merger with your competitor GoTo. Now, we're getting conflicting confirmations. Some are saying that that did happen. Some companies and some analysts say that there were no talks. Can we hear from Grab exactly how close you were to a possible merger actually with GoTo, and if talks or advanced talks did take place over the last couple of months?
JP, we don't comment on media speculation when it comes to M&A activities. We have a very high bar when it comes to M&A. Our hurdle rate is extremely high. We always focus on organic growth in the business, as you've seen and we've demonstrated in the last couple of years. And when it comes to inorganic growth, we are being very selective in terms of how we look at that. Indonesia is a very important market for us. It's a thriving market. If you look at it's a profitable and high growth market for our business today. And if you look at just on the Q4, we grew that Indonesia market business 10% on a quarter-on-quarter basis. It actually grew faster than the on-demand GMV growth. So we are going to continue to double down in Indonesia. We did in 2024 as well as in 2025, and just really focus in outserving our customers and our drivers and our merchants there.
All right, Peter, thanks. And I just had to ask that question. Now, I do want to focus on one thing that looks a bit promising for Grab. Now, we've seen consecutive quarters of adjusted EBITDA being positive, but so far we've seen also 2 quarters where the bottom line net profit actually came in above zero, actually. In fact, I believe for the 4th quarter, we saw your profits actually come in, net profits come in at about $11 million for that time. Do you think this will continue? And could 2025 be the year where we see Grab actually positive in terms of net profit, not just adjusted EBITDA?
Of course, yeah. We're balancing the growth and profitability. We had record profitability, $313 million adjusted EBITDA 2024. We also generated $136 million free cash flow in the business. Our target is to continue to grow that adjusted EBITDA. If you look at our guidance, somewhere between $440 to $470 million in terms of adjusted EBITDA. From a net income perspective, we want to get to a positive net income for 2025 on trailing 12 months. Now, there's a lot of moving pieces. We're still very early in the year, but that's our internal target. We want to actually get there in 2025.